Teamlease recorded strong revenue growth in the June quarter as specialized staffing segment outperformed the general recruitment. To get a better idea about the segmental contribution and growth prospects, let's speak to the CFO, Mr. Ravi Vishwanath, who's joining us on the show this morning. Mr. Vishwanath, thanks very much for taking out the time. Let's talk about the various segmental performances. And while we've seen general staffing as a segment do okay for you, the specialized staffing segment revenue growth of 10%, I believe that is much lower than what your aspirational growth target would have been, closer to 20%.
True. Like you said, let's look at the growth and the profitability segment by segment. If you were to look at the general staffing business, I think we've come in pretty strong. I think the quarter-on-quarter growth has been pretty good. We continue to see a fair amount of demand for the volume staffing or the general staffing that we have. Profitability is on an upward trend. We've always maintained the view that that we would be a consistently warm company. We would not be hot or cold. And in line with our philosophy, I think our growth has been maintaining a steady momentum over the past few years, and we expect it to maintain it into the future as well. So the general staffing business, the open positions that we have currently from our clients for filling up are much better in the current year than what it was last year. So overall, the general staffing seems to have done pretty well for us, and that's a core business. Almost 95% of our revenues come from general staffing, and that business is on track. Coming to specialized staffing, we have two distinct businesses in the specialized staffing. We have the IT staffing and we have the telecom. The IT staffing continues to be fairly strong. They've done reasonably well. The margins are in line with our expectations. They could probably be better, but they are in line with our expectations, given that we acquired a reasonably lower margin IT staffing business on 1st of April, which is an Eccentric Solutions, which is a Hyderabad-based company that we acquired, had a lower margin compared to our own. I think the combined margins of these two entities have come in at a fairly reasonable about 9% between both of them together, which is absolutely in line with what we had expected. Telecom again continues to be on the upward trend for us. We did lose a fair amount of money in certain deals in the telecom business. We have exited most of it. There are some which still continue to be there, which we will exit over the next couple of quarters. And by the end of Q4, we expect this to be back on track to where it was when we did the acquisition of telecom staffing, which is Evolve Technologies. So that again is no cause for concern, and is on track and in line with our expectations. One area. So the last one is the other HR services. In the other HR services is what has caused a dip for us in the overall profitability, given that Q1 of last year, we came in at a total profit of about 2.4 crores, and that for the current quarter was a -6. Let's break up the other HR services by businesses. A large part of the HR services consists of the training business, and in the training business, we do a fair amount of training for the government programs. It is in this segment that we had to provide for certain receivables, not on account of the fact that they have turned bad, but purely on account of the fact that the collection cycles have not kept pace with our line of thinking. And again, we follow a very conservative or a very strict provisioning policy in the company. So we had to provide for these receivables. In view of these elections, some of the collections have been delayed. We expect a large part of this to be reversed between Q2 and Q3 because the collections are in the pipeline. We do expect that these collections would come in and these provisions that have been created by us would get reversed.
Okay.
The next element of HR services, my permanent recruitment, there is some amount of slowness that we saw in Q1, but Q2, we should buck the trend, and that again should be back on track.
Yeah.
Third is compliance and payroll outsourcing, which will turn profitable for us in Q3 and Q4.
Okay.
So overall, I think our focus is to get the other HR services back on track, get the Evolve business back to profitability in line with what it was at the time of acquisition, and continue to do well in my general staffing and ID staffing business.
Okay, got that. So that's a very good holistic view that you've given us, Mr. Vishwanath. Just to come in on the margin execution front, has that been up to the mark, or do you think you missed out a bit? And what would you attribute that to? Would it be the PF remittances? Would you be sectorial distribution of unallocated expenses, wage hikes, or a combination of all?
No, it's actually, for us, always the PF has had no impact on us because in the general staffing business, the PF is a pass-through cost for us, and all our clients have agreed to accept these increased costs. So we have not had any impact as far as PF is concerned on our businesses, maybe marginally for the core employees of Teamlease and for certain specialized staffing businesses, but it's not really a big element for us to be worried about at all. But the core employee payroll costs have actually kicked in from 1st April. So therefore, in line with what we had planned, the first quarter always will be lower than the Q4. If you were to do a Q1, the Q4, a quarter-on-quarter comparison, we'll always come in lower than Q4 in my Q1, and that's been the trend. So I think overall, like I said, what has brought our profitability down was the other HR services, which is what we are working on getting it back on track. Other than that, my general staffing business continues to do well, and my telecom and IT staffing are actually performing in line with what we had expected them to.
Okay. So, while you obviously said that general staffing contributes a majority of the chunk to your revenue, so that's obviously doing well for you. Could you give us a slightly more forward-looking projection as to how do you expect that to continue to perform, and whether or not specialized staffing can still remain a little bit of a sore spot if you move forward? While you're upping other HR services, what happens to specialized staffing then?
Yeah, okay. So let's take the general staffing first. Like you said, we do believe, given the current demand that we see from the current demand for temp staffing that we see from our clients and from some of the new contracts that we are talking to, new customers that we are talking to, we do think we will be able to maintain the annual growth rate of between 20 and 25% in the general staffing business, which would mean a volume growth of anywhere between 15 to 20%. So that is what we can expect for the year. In IT staffing, again, with the acquisition of Eccentric, we should be able to again grow the business in line with what we have done in the past. I think at 25% growth for my IT staffing is a reasonable expectation, and we are working towards that. Telecom again will see a modest 10 to 12% growth, but the more important thing is telecom will be, by Q4, we expect it to be back to the same levels of profitability as what it was when we did the deal way back in December 2017.
Okay, in which case, can you leave us with a consolidated number, not a segmental breakup, but a consolidated number of what you might be able to do on top line, bottom line in FY20, and can margins move up from that 1.8 to 2% level to a slightly higher trajectory?
See, we have not given guidance in the past, and we would not be doing that even now. But all I can tell you is we will be able to maintain a top line growth of anywhere between 20 and 25% compared to my FY19 numbers, and my profitability growth has always been higher than my top line growth. If you were to look at it consistently over the last few years, our profitability growth, the growth in profitability has been higher by at least about 15 to 20 basis points, and that is something that you can expect in the current year as well.
All right, Mr. Vishwanath, it was great chatting with you. Thank you so very much for joining us this morning.
Thank you very much for having me on.
As management of Teamlease there, the main core business, they're still very optimistic about how that will do. So
yeah, 20-25% growth in FY20 is maybe not a bad number. Well, it seemed like a day of bounce for the markets at large. To just a quick mention there, somehow it's not quite lived up. We're still above from the levels that we were at. We were very close to 11,000. Now at 11,051. Bank Nifty is almost in the green, and stocks like Axis Bank, etc., are not as low as they were. In fact, stocks like IndusInd Bank are in the green. So it's an interesting afternoon. It's interesting morning.
Yeah, you wish you can run through these days, no?
Yeah.
Just wrap it up straight to the afternoon.
I wish, yeah, well, actually, from the looks of things, if this is what we end at, I don't think the bulls would be unhappy. But, well, maybe the F&O show takes forward some more stock-specific conversations from Devini and me and put this show together. Thank you so much for watching. Stay tuned to Bloomberg Live.